Welcome to First Line Compliance's Carefully Off the Cuff.
Well, hi, everyone, and welcome back to the next episode of Carefully Off the Cuff. I'm Josh.
And I'm Ray.
We are here today with a really important topic, reporting. It's such an important topic, we needed to bring some experts in the field. So let me introduce you to a couple of those. First is Rebecca Hanson, who leads Quik Filings. Rebecca is our go-to at First Line for all things Secretary of State type reporting. She is the best in the business. Her services are less expensive than the competition, and she's a really nice person. Rebecca, thank you so much for being here.
Thank you.
And Flea Bowers, many of you have heard me talk about Flea before. I refer to Flea as the queen of compliance. She really is a huge resource for us at First Line, brings a tremendous amount of experience and a wealth of knowledge in not just issues related to reporting, but really across the spectrum of compliance. Flea, thanks so much for joining us.
Thank you very much, and I appreciate the opportunity.
Excellent. Ray, if you don't mind, get us started. Let us talk about some of the different types of reporting and why it's so important.
Well, I appreciate that. I mean, and you know, Josh, it's one of those things that we love in the mortgage biz is reporting, not really. And of course, it's data driven, and we know that sometimes the quality of data and things we need are a challenge. And then of course they ask you to report things, and it gets very confusing very fast. Now we know that the mother of reporting in the grand scheme of things, if you've been in this mortgage business longer than 2 years, is the HMDA, right? It's the annual report that we have to give, what's it, March 1st, whatever. We have to collect data, 100 and something data points, et cetera, make sure it's clean. And we focus like everything that we can get that done. Sometimes we do it monthly. Maybe some people start in January, some people, let's just say a little bit later. But the whole point is our goal, like Christmas, is to get that done and move along. Truth is, of course, we have lots of other reports we have to do at the state level, and often not just one or two. It drives you nuts. And I'll tell you even, and this is where I've had confusion often, particularly those not in the licensing space in our clients' companies, is, you know, they file something at Secretary of State, they think they're done. It's like, no, there's actually two silos and that create anything from renewals and certainly to reporting that you have to do. One is the Secretary of State, and that's really about being in the state because you do business. That's just about it. And then the reports and the renewals that you have to do with that. And then because we're in the mortgage business, completely separate and usually not related to that, is we have mortgage related reporting we have to do, and sometimes numerous times in a state, and sometimes, you know, annually or every 3 months or every month, or maybe in a single state doing it each once a month, and they don't talk to each other. A lot of stuff going on with reporting. So with that, I really thought it was important to, first of all, let's talk about the two different areas, the silos, if you will. Now, Rebecca, I know you focus on Secretary of State, and maybe you can explain what that is and those types of filings and maybe some history on that.
Yeah, thanks, Ray. So our company, Quik Filings, we do all things Secretary of State related. So the first part is somebody wants to do business. I explain it as they ask permission. Can I do business in your state? And if so, can I do business under this name? And a lot of people have trouble with their name, and especially the mortgage brokers. There's certain words that I'm sure you find also that are restricted, or you need permission. So that can all cause delays when you're starting. So you've gone ahead, you've filed your registration with the state says, yes, you can do business. Then you have to keep that active. And so the mortgage brokers that you're working with and the lenders, they have their licensing completely separate. Most of the licenses require the state registration to happen, and then it needs to stay active. And a lot of times our clients won't file the reports needed with the Secretary of State, and then their status is revoked or it goes delinquent. And then that affects their licensing.
Oh, yeah.
So we don't do anything. I know that there's other experts here that have, you know, a lot of work with the licensing aspect. All of you on this call, other than me. But as far as the states, they want to make sure that you're still active, basically. So once a year, sometimes are biennial. Pennsylvania's once every 10 years. So
Wow.
They just want to know, has your information changed? Has your mailing address changed? Has your principal office changed? Have your officers changed? Some states want to know if your stock information or the shares that you've issued have changed. Very few states from this standpoint want to know about how much business you've done. They don't necessarily care. And I have clients that come and say, I did no business this year. Why do I have to file a report? Because the state wants money, number one. And number two, they want to make sure they have your information accurate. If you do get something from the state, does it go to the right address? People move all the time. Businesses move. If they don't update that address with the Secretary of State, they can miss important documents. So that's
Rebecca,
what we
I'm sorry to interrupt, but just
Yep.
to that point, because it's one of the things you guys have been super helpful with. It's both the Secretary of State filings, but when, let's say that someone wants to sue the company, that typically gets done through a registered agent.
Yeah.
Mhm.
If you don't mind, talk just a little bit about that piece as well, because we'll dive into the mortgage related
I love this.
reports.
Great.
But the two
Yeah.
key concepts that are required when we apply for a license and when we want to renew a license is making sure we've got a certificate of good standing, and then we've got a registered agent listed in the filing.
Yeah, and that's our company also provides a national registered agent in every state. So when our clients sign up with us, we order the registered agent service. If we're helping the registration with the state, we use our agent. And then as our duty as the registered agent is we send you reminders every year and when you have a report or if you are sued. And that's the point that these states want. They want an office location if somebody needs to serve papers to you. And so that cannot be a PO box, and that cannot be if you don't work in the state. They won't serve papers out of state if it's an issue in one state. So as the registered agent, they receive all these important reminders and we pass that along. If anybody wants to have their agent switch or just, oh, well, we're just done doing business, we're going to walk away. Well, your registered agent is still acting on your behalf. The state, not your license, the state still thinks that you are doing business in their state. So you still have these requirements, the agent, the reports, the updates.
And just to be clear, and when we're talking about registered agent, and yes, you do need you need an office there, so to speak, but that's what you are. The company doesn't have to get its own office. We just sign up with a registered agent and they serve as completely delegated. They do that thing they do, and we met the requirement simply by signing them up, correct?
Yeah.
Got it.
And that's correct. Now, I do know, again, from your standpoint, some states require, I think, a brick and mortar. So you
Correct.
need that.
Correct.
And I don't advise my clients of that because I don't know.
Yeah,
so I would
understood.
refer them to the other experts in the
And
room.
And I appreciate that's exactly want to make the distinction. I don't want someone walking away saying, I just heard I need an office in every state. Like, no, what you do is you call Rebecca and she'll take care of it for you. That's what I'm hearing. So,
Yes.
One last piece before we hand it over to Flea. A result of the current market cycle we've been in, companies have been making the decision either to stop doing business in a particular state or have been acquired by another company or winding up their business. Do you mind just talking for a moment about what happens when a business closes down and what needs to be filed or what notifications or process we need to give?
Yeah. So from hearing from the rest of you, there's a lot more requirements that happen on the licensing. And so I find a lot of our clients are very concerned with how they shut that down when they're done doing business, and they neglect the Secretary of State side. So according to this state that you're in, you've gotten permission. They're granting you that. If you're done doing business, you need to withdraw your registration if you're a foreign entity. And if you're a domestic, this is your home state and you're done, you dissolve your entity. A lot of states call it different things. There's withdrawals, there's dissolutions, there's cancellations. They basically all mean the same thing. It just is where you are and what type of an entity you are. And when you do that, you cancel all your obligations to the state. You don't need to file the reports anymore. The state is then not communicating with the other divisions to make sure you're still up to date with the Department of Revenue or filing your franchises. And I will say that the Secretary of State does receive those reminders. So one of the services we do is we send off the reminders, and we do send franchise tax reminders that some states have, but we don't have anything to do with those filings. So when you do cancel, a lot of the states want to make sure you're in good standing with those departments. So you can't just dissolve your company if you have outstanding taxes due to the New York Department of Revenue. Some states, very simple process to withdraw. Other states, Louisiana, can take 2 years. They check with multiple agencies, the Workforce Commission and unemployment, and they make sure you're in good standing with all of those. And the other thing that I always tell my clients is we provide this registered agent, you're required to have it. It renews every year, right? It's acting on your behalf. There's no paperwork you do. But when you cancel, you need to cancel your registration, and then we can remove the agent from record. Otherwise, the registered agent is still acting on your behalf. You could get sued because maybe you closed your business in not the right way and you left something outstanding and somebody's fed up. So you do have to cancel all of that in addition to what you need to do on the licensing side.
Excellent. Well, thank you. Thank you for that. And I got some other questions we'll go to, but I want to talk to Flea because Flea, I know we got Secretary of State. Now we're talking about reports and information that we have to submit because we are a mortgage lender, typically under the guise of the mortgage licensing law itself, separate from Secretary of State. I have a feeling there's like a few or a handful of reports we have to deal with, I'm sure. Why don't you give us some insight and secrets on that?
So everyone is aware of the call report, but in addition to the call report, some of the states are still archaic in some of their requirements and still have separate reports. Nevada, for instance, still requires a report to be submitted every month. You've got North Carolina that requires you to log in on a quarterly basis and fill out a very comprehensive report of your loan activity in that state. And then there's some states that still have annual reports, such as California. Both the CFL and the RMLA license have an annual report. Washington has an annual report. South Carolina has an annual report. California has its Holden Act report. If you're a HMDA filer, you still have to check a couple of boxes on that Holden Act report and file that. Illinois has a report every 6 months of any defaults and foreclosures. So you have to remember to file that. And then Georgia, don't forget to file your fees, every quarter that you collected on those Georgia loans, that little tiny $10 a month fee that you collected on all of their loans. So you've got to file that too. Some states, Massachusetts, New York, Illinois, are the first ones on the board to create CRA requirements now for independent mortgage bankers. And CRA, we've always related to just being a banking Community Reinvestment Act, but these states impose some of those same requirements on independent mortgage bankers.
Well, we'll explore, and maybe Josh and Flea, maybe we'll talk about both. Is explain to me this. I mean, we know the CRA, but to be more clear, CRA is about what a bank does and how they serve the community. We know that. Well, we don't have banks and branches necessarily as a more independent mortgage bank. So what are we really doing with the CRA? What are they looking for in the report? I'll start with Flea and then maybe Josh. But Flea, any thoughts on that? And then Josh, you next.
So the main thing they're looking for is that, we did receive income from a loan transaction in that state. You could have received origination fees or you earned money on the back end sale of that loan. So are you reinvesting that money back into the communities themselves? Are you helping the low to moderate income or the diversity of the ethnic groups in that state? Are you really reaching out to help? And that's the things that they're looking out for. They know that we don't take deposits and we don't do auto loans or personal loans or issue, credit cards and stuff, but we are still earning an income off of the constituents in those states. Josh?
Yeah, really spot on. And as Ray mentioned, as we've talked about, the Community Reinvestment Act was started to regulate depository institutions because those institutions are taking deposits from the community. And so they then have this obligation to reinvest those deposits back into the community. On the non-bank side, we're more looking at what are the efforts that lenders are making to offer and make credit available. And in states like Illinois and the Massachusetts, New York that you mentioned, it really is looking at, are we providing credit equally? Are we making access to credit available equally? And to communities who have been traditionally underserved, are we making efforts to reach them? The HMDA data, both as well as the CRA data, really give government and regulators an opportunity to measure and compare how well we're serving the communities that we're in. How well do we do it on our own? How do we compare to others? And so in these areas really related to the non-depository CRA requirements, strong effort at what are we doing for marketing? Are we providing other types of services to the community, things like financial literacy education, first-time homebuyer seminars? Where's our distribution of loan originators? Are we opening branches in areas that have been traditionally underserved, or on the opposite, which we will get critique on? Are we only opening offices in affluent communities? Are we only serving borrowers that are of a particular group or makeup and not providing those types of services to others?
Thanks, Josh. So I want to pivot a little bit, and I know we'll talk more about the reports, but and in fact, maybe in this fashion, and that is Rebecca and then Flea as well. I mean, again, we have all these kind of reports, but is there any state or any particular report that we should know about that kind of pops in your head as like, oh, that's the tough one, or okay, besides HMDA, I suppose, for the mortgage side, but anyway, something that comes up that data is never available and it's hard to do, or that one's really expensive and we don't know why. Is there anything, Rebecca, maybe in the Secretary of State world that you can think of, or tips or anything you can think of about filing Secretary of State filings or reports?
Well, I know I always warn people about Florida. Florida, you don't want to miss the deadline. And with the Secretary of State reports, they're due all over the board. Some states are on April 1st or April 15th every year. Other states are based on when you register. So it's different. Florida, if you miss it by an hour, they charge you $400 late fee automatically.
Wow.
So get those done on time. Nevada and Oklahoma, Wisconsin, they can up the rate based on your share information. So if you have that, if you're going to make a difference in how many shares you've issued for your companies, beware that it could affect your annual fee due to the states. State annual reports, listening to the rest of you, are a breeze. They just want this basic information. Almost 99% can be done online now, whereas you used to have to mail them in. Illinois report kind of does their fee based on either your paid-in capital or it's something different. We don't file those reports. We file reports for a lot of our companies as long as they make sure that we're updated with their address and officer information.
Let me just piggyback on one of the things you mentioned, and Flea, have you talked to it as well? Name approvals. Nevada always comes to mind because their process, particularly for a lender who's applying for a license in Nevada, almost every mortgage lender has a word in their name that will require permission from the state banking department in order for the Secretary of State to grant your certificate of good standing and give you approval. And so it creates this almost chicken and the egg or backwards process where Nevada won't issue a license until you've received your certificate of good standing, but you can't get your certificate of good standing until the state's provided your name approval. So coordinating those events and making sure that we've got a process and given enough time to be able to meet those requirements becomes really important.
Yep. And New York is a state that takes a really long time for word approval for mortgage companies. You have to write away to them and send it in, and they can take 6 to 12 months sometimes. Wow. And I've tried to even call and they say, we can't give you approval now, and you'll just have to wait. And then after 9 months, it can be denied. So then you've waited this whole time and now you have to start the process over.
Very good. Well, and again, so, okay. Again, always the challenges of our business that we embrace. Flea, in same thing with you, insofar as, you know, the sense of deadlines and when they're due, kind of, at least generally when they're due, and also kind of the reports that are tricky or impossible or challenging to do more so than others that you can think of that we should watch out for.
So definitely the California CFL report. It's 77 pages, and most of it is going to be blank for an independent mortgage banker because it breaks down the loan production on below $2,500 and then $2,500 to $5,000, then $5,000 to $10,000. And we generally don't have loan amounts that low, and especially in California, but you still have to put zeros on that whole report. So that one is just time consuming by itself and the length of it. The North Carolina quarterly reports are detailed because of all the information they want to collect, basically every fee collected on that loan. So you've got to make sure that you have a report that's coming out of your loan origination system that breaks down the fees individually, the finance charges and the non-finance charges, because you have to enter those individually in the system or upload a CSV file that's going to cover that. And their system, I'll tell you right now, their system will never match what you file on your quarterly call reports because of the way that they collect the data for the NCCOB versus what the data requirements are for the call report.
Super helpful. Just the nuance of the different methodologies of reporting. You mentioned North Carolina and NCCOB portal. With California for the RMLA report, you've got to go through the specific portal for them, but the Hold'em report, you email that one, or in South Carolina, you email that one too. So keeping track or monitoring, let me just throw a quick kind of plug or compliance best practice. Use a chart. There's way too many moving pieces to try and remember. If it's not a chart, you've got ticklers on your calendar to make sure you've got reminders, and set those reminders not just when they're due, but how about a month or two before, so you can have some time to plan and begin providing the information or the data that goes into the report. And by the way, review those reports, scrub those reports to make sure. Flea, I love the point you raised about North Carolina and the fees. You're not just reporting your loan volume, you're reporting the fees. Right. And there's specific formatting for the fields that go into it, and nuances based on what data is reported versus what is not. Finding that out the day the report is due is not the best methodology to prepare, and is more than likely going to lead to errors. Let me just throw in a couple pieces.
I'd like to real quick, and even then, I know one of the challenges, and I've seen this before from even regulators ask this, hey, why does your NCR report not match our annual report? It's like, well, the threshold and definition of application on your annual is different than your NCR. Did you not know that? We didn't write the rule, but they don't even know sometimes. So don't freak out when numbers don't necessarily, they might be asking, a question might be different within the report itself. So don't freak out if they don't match. Now, if they're supposed to match, okay, maybe freak out. But same thing with North, I get there, right? It's all a matter of, what are they really asking for in this report versus that? Doesn't seem like a lot of continuity. I know the reports are generally, I think, first, second quarter is the craziest time for report dates, but it really happens throughout the year. I mean, there's stuff even, Josh, I think in NMLS that we have to upload, and documents and financials. I mean, there's so much to do. I don't want to freak people out, but it's a freaky place to deal with. So I can appreciate that. Josh, I'm sorry, go ahead.
No, you're good. I was going to throw in some others we haven't talked to yet, and you gave me a great segue. So first quarter call report, well, let me take that back. The call report filed in the first quarter for the fourth quarter of last year, due February 14th. Financial condition components of the call report are due later, depending on when your fiscal year ends. Mm-hmm. In addition to the financial condition, we also have an annual financial statement. And depending on the type of license we have and the state that it's in, sometimes that's audited financials, sometimes it's a compiled statement, sometimes it's a generally reviewed statement. Again, put in some time to review what those requirements are. Specific to the NMLS, for anyone who's got the access, when you go to the home screen of your company's profile, on the bottom left, it will show you the deadlines for when those reports are filed, whether they've been filed or not, and whether they're past due. Pay attention to those, look at those dates. If you're not sure, we'd love to talk to you about those and give you some advice on how to complete them and stay proactive about them. In addition to call reports, again, depending on the type of lender and who we may be approved by, remember FHA recertification is due the end of March. If you don't recertify, or at least complete the renewal and state that you can't certify, you're likely to get caught up in a mortgagee review board case. That is not a place you want to be. Similar for VA, by the end of April, we need to do our renewals. USDA has a renewal process. So depending on where we are licensed, where we're approved, it's really important to keep a broad perspective of what's required of us, again, so we can keep that tracker, keep those processes in place. Flea, what did I miss?
So I would only add that there's things in addition to reporting. So at the end of every year, by January, you've got to get those 1098s out to your consumers. You have HR, ERISA, and 401k requirements and reports that have to go out to your 401k participants on an annual basis. RESPA requires annual escrow analysis, escrow reports. Some of the states, we talked about the Secretary of State reports, but some states, individual counties and cities require business licenses to have an office in those areas. So you've got to make sure you renew those. You've got your annual privacy policy. And there are some states with their franchise tax boards or their excise tax boards that you have to file monthly reports. Washington comes to mind, and so does Nevada. You have to file reports with those states with regards to the income that you paid residents, your employees that live in those states. And then they tax you every month based on that. So there's a whole plethora of things out there.
So I have a bad feeling if someone who wants to start a mortgage company watches, this is the first video they watch, I think they're going to change to like car loans or something. Look, I think the stuff is knowable, right? I mean, there have been people doing this for a long time and getting it right. It just takes time, focus, and some kind of commitment. So not to freak people out. I mean, I think it's there, it's knowable. It's just tedious, and it's not gelled in one place. I mean, clearly, if you speak to professionals like us, we've done it. We can probably gel things together. I know, Rebecca, you gel things really well for us and a lot of our clients. So I get that. But yeah, it seems to be, I would call it I think it's the legal term, it's called a hot mess. but it can be managed and managed right. So I don't want to freak everybody out by listening to this. It's just remember these are the things, and more importantly, it's probably a support group. We're all in this together. We all have to deal with it. We all have scars. Look, even Flea, I know you're the queen of compliance. I'm sure somewhere in your career it was one of those, oh, I think I got that one data point wrong, or maybe I got a bit late. We all learn. So
Constantly
Yeah.
have that.
exactly. So Josh?
Yeah, look, I said it in the beginning. This was an area we needed the experts. I think at this point, it's abundantly clear they're on this call. Rebecca, Flea, thank you so much for participating. We, again, happy to share information for everyone here. First Line would be more than happy to help on any of these components. Really a pleasure having everyone on. As I usually say, subscribe, rate, review. Thank you again for joining, and we'll see you next time.
Thank you.
Thank
you.
you.